We've noticed a lot of taxpayers being very careful and compliant around supplies where they are collecting or paying VAT. But what about imports of services and goods which are subject to RCM or what we call reverse charge mechanism? There are a lot of non-compliances here, there are a lot of mistakes here, and Gaurav today is going to highlight the key areas that you must as a taxpayer look at while reviewing these compliances. So Gaurav, what do you think about the major non-compliant issues in RCM?
So first of all, people have taken this concept for granted. Why? Because they think that it's just an input and output. Simple. But they're forgetting the main part. That you're stepping into a shoe of a foreign supplier and discharging VAT on his behalf. So you can't go on the output part.
Right.
And input part is your area wherein you can claim input based on your conditions. If you're meeting the conditions, if you're satisfying the conditions, then only you can claim the credit. So now what we have seen is that a lot of taxpayers are missing out on the concept. They're just simply treating it as input and output and they're claiming it and there's no impact. However, there's a far-reaching impact if you miss out on a lot of things. I'll give you one or two examples which will clarify more things. What is happening now? You have seen that for import of services, the invoice is dated maybe 6 months back. The companies are posting it now in their ERP and recording the output tax, and they're claiming it also in the same tax period. Once we analyze, when we get to understand what was the reason, they were like, the services were provided 6 months back, but they're recording it right now. Now, as per date of supply rules, this should have been recorded 6 months back.
Absolutely.
And claiming or not claiming, the eligibility to claim could have been 6 months back or could have been now also. That is again a different issue. What we need to see over here is that the output has to be discharged as per date of supply. Now people are missing out on that. If you miss out on that, there's a cash flow implication.
Absolutely.
If you're eligible to claim today, maybe you're making a payment or you're making you're having an intention to pay today, maybe you're eligible to claim the credit today, but the output liability was due 6 months back. So these concepts are being missed and diluted. What has happened is that people have just thought this is an input and output, which is wrong.
So cash flow issue is one of the major impacts that it could have because of an incorrect reporting.
Yes. You've seen this more prevalent in the insurance company sector. Why? What happens is that insurance sectors, for the what you might say reinsurance, which is happening outside UAE, the invoices come maybe 6 months back, 7 months back, but they get recorded maybe like today, or maybe they have an intention to record it 3 months down the line, but the entire concept goes wrong. So what we recommend is that ensure that the invoices which you're getting from the foreign suppliers are current dated. Ensure that you take care of the date of supply from output perspective. Second thing, what we have noticed from a import of service perspective is that, again, while we are actually doing import tax apportionment, import of services and import of goods are disregarded. People have disregarded that, and once they sort of taking out the percentage for input tax apportionment, that has been not considered. Again, the ratio will come out wrong, and if the ratio is wrong, the entire import tax apportionment for the standard rated supplies, standard rate purchases, as well as for the RCM goes wrong. Second thing, what we have noticed is that they are not considering that reversal for apportionment for import of goods and services.
Absolutely.
In box number 10, they're exactly claiming what is there in box 3, box 6 and box 7, which is not the intention of the law. If there is an import tax apportionment, it has to happen for box number 10 also. If it requires that apportionment. Apart from that, we have seen that for import of goods, in import of goods, most of the taxpayers are not maintaining records. They're not doing a reconciliation with the custom records. What technically we tell our clients to do is that extract a report from customs, ensure that the customs record as well as your record are in parity with each other. Most of the players in the market are not doing this reconciliation. If they're not doing this reconciliation, then there can be a possible exposure which they're missing out on. They are simply claiming everything in box number 10. There could be imports which are not related to your company. There could be imports which you have missed and you should have reported in box number 7. So that sanity check is something which is required. Now, import of services, and import of goods are being critically reviewed while the audits are going on. And in most cases, we have seen that the FTA disallows the input tax. What we suggest our clients, if they are doing a review, ensure that they file a voluntary disclosure and report the import of services and import of goods, just to ensure that the input tax credit which they're claiming doesn't get jeopardized. So it's an important concept, but people are missing out on it. People are taking it for granted. But I think there's a lot of potential risk if you do not take necessary actions, and you do not have SOPs in place for reverse charge mechanism.
So as Gaurav mentioned, there's a lot more in RCM to look into, and it's just not a nullification of your debit and credit entries of your output and your input. There's a lot that needs to be looked at, especially with the documentation that goes behind it. Have your tax invoices in place, make sure your payments are done properly, and also your input tax apportionment needs to be carried out with a very well documented set of calculations. So for your imports of goods and services, make sure all of these points are checked.